Surging gold and silver break downtrends as midterms see red ripple, not wave. Gold and silver held onto yesterday's steep gains Wednesday in London, trading at 5-week and 4-month highs respectively against a rallying US dollar, as Russia pulled troops out of a key Ukrainian city, and early results from the US midterm elections said the Senate and Congress will likely be split rather than one party taking control. Gold prices spiked to $1,722 around this afternoon's London benchmarking auction, over $100 higher from the 2.5-year low tested for the third time in a month last week, and $40 above the post-COVID chart support level which gave way in mid-September. Silver meantime reached $21.59 per ounce after leaping as the midterm elections saw global and US stock markets fall on Tuesday, trading more than 22% above late August's 2-year low. Definitely not a Republican wave, said one senior GOP politician. They are trying to steal the election, said former Republican President Donald Trump, repeating his accusations from losing the 2020 White House race and blaming Democrats for causing technical issues with some bad news and delay in Arizona. Don't let it happen. Fixing at 3 p.m. UK time Tuesday at $1,678 per ounce on weak volume, gold then soared by almost $40 in latest trade, hitting the highest dollar price in a month and breaking what many chart analysts saw as the downtrend starting back at early March's Ukraine invasion touch of gold's all-time 2020 high around $2,070 per ounce. The dollar flip on midterm election day sent gold above $1,710, says bullion analyst Roner O'Connell at brokerage StoneX, noting how the US currency fell to its weakest in 4 months on Tuesday, with the big red wave now looking more like a ripple, if that. US real yields falling provided the backdrop when no one wants to be short gold into any US election, adds bullion refining and finance group MKS PAMP's market strategist Nikki Shields. Gold ain't waiting for what's expected to be a weak forward/interesting NFP US jobs report in early December, she said Tuesday, pointing to this week's fast-growing list of US tech company layoffs. The 75 BP Fed regime of steep month rate hikes is behind us, thus the $1,620-1,700 range for gold is also behind us, 3-4 attempts at the technical ceilings at $1,680 per ounce gold and $21 silver have given way. While the weak dollar grabbed the headlines, euro-priced gold today held above €1,700 per ounce, gaining 1.2% for the week so far, while the UK gold price in pounds per ounce also rose to 4-week highs, breaking above £1,500 and trading 6.3% higher from the start of November. Euro and UK prices for silver, a predominantly industrial metal, meantime touched 6-month highs above €20.40 and £18.80 per ounce respectively. The communist dictatorship in world number 2 economy China is meeting difficulties in enforcing its zero-COVID policy in the southeastern port city of Guangzhou, press reports say, imposing mandatory testing and local lockdowns where a growing number of cases are confirmed. Russia's top military commander in Ukraine today told the defense ministry that it's now impossible to supply his troops in the city of Kherson, winning agreement from the Kremlin for a retreat to try defending the eastern bank of the Dnieper, a major setback for Moscow in its 8-month war, according to Western media.